And we have with us right now Mr. Rostow Ravanan, who is CEO at Mindtree. Sir, thank you very much for joining us today. Good to have you on the show. Firstly, tell us, according to you, how was the performance as far as the first quarter is concerned? Because from the street side, it is certainly a miss.
Always a pleasure to be on NDTV. Difficult to explain why the analysts are calling it a miss. From our point of view, it was a satisfactory quarter. And from our perspective, the quarter turned out to be like what we expected. If you look at our announcement, which we made in April when we announced the Q4 results, we did indicate that the year is likely to have uneven growth between quarters. And to that extent, the quarter has turned out to be like what we anticipated. And like I said, it was a satisfactory quarter from our perspective. If you break down the results, 3 of our verticals did quite well. Retail, CPG, manufacturing grew a little more than 3%. Technology, media and services, as well as banking and financial services, both grew more than 4%. Only the travel industry had some client-specific issues in 1 or 2 cases, and therefore had a sequential decline in this quarter. So overall, I think it's been a satisfactory quarter. If you look, the picture we see as of today for the future also turns out to be quite positive. For the year as a whole, we think we will continue to do well. Like you've seen over the last 3 or 4 years, Mindtree has always done better than the industry. So we expect that same trend to continue this year as well. On the margin front, some of maybe the gap in the expectations for our actual numbers could be because of the transition to Ind AS in this quarter, and maybe the analysts were unable to predict the impact to us as accurately as they could have otherwise got the numbers, because of the transition to the new accounting standards. And the other change that we had during the course of this quarter was that our European SAP and HANA business swung from a profit in the previous quarter to a loss in this quarter, mainly because of a sharp reduction in revenue. The reduction in revenue was mainly because of the environmental issues that all of us are seeing in Europe at the moment. However, we think it's a temporary and a one-time kind of a blip. We expect growth to come back in that business also in Q2 and the rest of this year, and therefore profit margins should also improve during the course of this year.
Now, in your commentary, of course, you've also said that Q1 is going to look like, Q2 is going to look like Q1. What's the outlook ahead for the rest of the year then?
Absolutely. So some of the client-specific issues that we saw have already worked itself through, and some more I think should take another month or 2 to get cleared. Mainly because, for example, if you see some of our recent wins in Europe, ramp-ups will probably happen only by late August, early September, because July and August tend to be very light months in those geographies because of vacation that happens there. So overall, Q2 is likely to be moderate growth, stable margins, and stronger growth and improved margins in the second half of this year.
Second half of the year, we understand, is seasonally a weak part of the year. Then what makes you feel so confident that you will be able to achieve good growth?
I would say largely 2 factors. One is some of the things that are making our customers uncertain have already played itself out. So the headwinds in a way are already known and already factored in. And then if you look at the tailwinds, whether it is in terms of new wins, contracts already signed up or projects already awarded to us, except that it's just starting off on a delayed basis. So all of those should give us confidence that H2 of this year will be stronger than H1 of this year.
Let's also talk about Bluefin now, whose revenues have actually declined on a sequential basis by 8 to 10%. Do you see that getting better in the near future? And what's the outlook for the full year?
I think that business is currently looking at a fairly strong growth in Q2. If that growth happens like what we are anticipating, it should actually cumulatively make up for the loss that we saw, or the slower performance we saw in Q1. So we see more as a one-off client-specific issues which affected them in Q1, and we see almost all that entire momentum coming back in Q2. And if that revenue momentum comes, the bottom line performance obviously also will correspondingly pick up.
Talking about your TCV deal signing momentum, even that has come down. What do you think the trend really is going to look like ahead?
We don't see a worrying picture. So typically, obviously, between quarters, some quarters there's larger sign-ups, and some quarters it's a little lesser. And also, when you look at it in the context of the fact, like I explained, there is some overall economic uncertainties or political uncertainties in some of our key markets. So given that context, I think, like I said, we had a satisfactory deal sign-ups in Q2. But the highlight that I'd like to also draw our attention to is this quarter, for example, on digital, which is an absolute sweet spot for Mindtree, we had a $93 million contract signings, which is higher than the previous quarter. So areas of strength for us, we are doing quite well. Other areas which are buffeted because of the global uncertainties, that's where you're seeing some high performance in one quarter and a medium performance in another quarter.
Can you also talk to us a little bit about, as far as the client matrix is concerned, we have seen a decline in your specifically $25 million plus customers in the recent quarter?
The decline in the $25 million customer is mainly because of one account in Europe, which we explained about 5 or 6 quarters ago, where we anticipated, given their changes in business priorities, profit pressure, etc. So, that was the impact of one European customer in the 25 million category. However, if you see the $10 million customer category, we actually increased it by 1. It was 15 last quarter, it has become 16 now. So I think the issues where I would say relatively around one customer and their own business uncertainties, don't see anything fundamental or long-term there. This quarter did see a slight decline in our top 10 customers, especially if you look at the customer number 2 to customer number 10. But again, like I said, partly environmental issues, and in some cases, client-specific issues. Nothing that has fundamentally changed. We expect that to recover in the next 2 or 3 quarters.
Right. So overall, you're giving us a sense that H2 will be better. For the full year, what's the target, and how do you think FY17 is going to look like as compared to FY16?
Little bit of it, I think, is too far in the horizon right now to make any confident predictions. But there's a couple of things that give us confidence that Mindtree should continue to do well, even over a medium-term basis, like you said, over the next 2 or 3 years. Firstly, the capabilities that we have built, especially around digital, and the innovative sort of service models that we are taking for some other traditional services, which is absolutely sort of resonating with many of our customers and with many of our prospects. So what we have seems to be relevant. The value proposition we have seems to be relevant to the marketplace. So Mindtree should continue to do well because of that. Second reason why we are confident is that we continue to be a place where great talent globally wants to come and be part of. That should also help us deliver great results to all our stakeholders.
All right, Mr. Ravanan, we'll leave it there. Thank you very much for joining us and sharing with us the outlook ahead for FY17 and, of course, how the quarter was for the company.